Joining us now, Goldman Sachs Vice Chairman Rob Kaplan, who served as Dallas Fed President. It's good to see you.
Good to see you, Joe.
I only call Austin Goolsbee you'd be Mr. Former President anyway, I guess, Rob. We had some recent data that all of us saw that seemed to bolster what I now know is your opinion, that any Fed cuts this year might be at least suspect at this point. The last one wasn't a given, and there was some dissent. Do you think we'll have any this year?
Yeah, I think we probably will. And just to remember, the Fed cut 75 basis points in the fall, including one in December. And the reason it did that, it wanted to protect against a weaker labor market. And it did that despite the fact that inflation, while not getting worse, has been sticky around 2 3/4. The issue is they're now at neutral. And when I say neutral, I think the real neutral Fed funds rate is about 3/4 to 1%. Add the inflation rate, so the nominal neutral rate is, say, 3.5, 3 3/4. They'll be willing to cut, and I would be willing to cut, but they're going to need to see more improvement in inflation. We may well get it. Our own economic forecast is we will get improvement, but they're not going to want to anticipate it. They're going to want to cut rates when they see that improvement. And we do believe that will happen during the year, but they're going to want to wait to see it.
Do you think that the concern that you talked about, which justified the cuts, and that is the labor market, has that resolved itself? There's some people that think that we're already on the other side of a slowdown in the labor market. You look at claims, things like that.
Yeah, listen, our forecast for GDP growth, and the Fed's own forecast, is that GDP growth is going to be 2.5, 2 3/4% this next year. Our own forecast is 2 3/4. In other words, we're going to get a significant firming in GDP growth. You got significant tax incentives, tax on tips, overtime, tax refunds from last year, accelerated depreciation. You've got the AI infrastructure boom. And so in that context, my own view is more likely the labor market will firm. There might be structural issues between people looking for jobs and open jobs and a lack of matching, but I don't think you're going to see a cyclical slowing. But the Fed leaned into it anyhow by doing those 3 cuts last year. And I think it's ready to do more, but it wants to see it. And the tension will be, the new Fed chair and the administration probably wants them to anticipate improvement. And I think they're more inclined to make moves when they see improvement.
Rob, it was pointed out by, I guess, Fed critics to some extent that we for 5 years, we've been well above, really, 2% inflation. Yeah. And yet we've had the cuts that you just outlined. They would argue the goalposts have not been moved. I guess there's one-off instances that they cite for why we're supposed to be able to understand why they would do that. If they purely were doing coincident inflation indicators, we would have never cut.
Well, listen, the fact is you got 2 big disinflationary forces in the world, and you've got to look forward. One, despite we've had goods disinflation for the last 2 or 3 years, the tariffs may have paused that, but we've got enormous manufacturing overcapacity driven by China. You saw China's trade surplus. We've got a lot of global overcapacity. That's going to reassert itself. That's disinflationary. And AI and productivity improvements from AI will, over the horizon, be disinflationary. So there are factors that are increasing costs, but there's some disinflationary forces. I think it's the right thing to have anticipated those, and also the labor weakness. I think it was right to deal with that. And so I think the Fed's in the neighborhood at the moment, it thinks, of where it should be. But if the forecasts are right, there'll be more cuts, but they won't happen until you see evidence of inflation improvement. And we may well get it.
Do you have a feeling on how this plays out with the new Fed chairman? And it's now muddied a little bit. We've had individuals say they want this issue with Jay Powell resolved before they'll consider anyone. One person said, I wouldn't even consider my mother. I don't know why. I mean, no one's considering your mother, but I guess he was using an expression that nobody's going to get it until we have that resolved with Jay Powell. You expect this to get resolved and then we'll move forward, because it's supposed to happen soon.
I expect it to get resolved. As an observer, I expect it to get resolved. I think the brouhaha over the weekend and into this week, I don't know that we're going to be talking about 3 or 4 weeks from now. However, the one imprint that might persist from what just happened is, I think there'll just be a greater onus on whoever's going to be the Fed chair or the candidate to demonstrate that he or she is politically independent. You might have strong views and will have strong views, but won't be influenced by political pressure or political consideration, at least as it relates to the Fed funds rate. I would emphasize on regulatory policy, that does change with administrations. It has for many years. And I could see it with a new Fed chair. You'll see more collaboration between the Fed and the Treasury on managing the portfolio. But on the Fed funds rate, it'll raise the bar for the new chair to show he or she's going to stand on their own 2 feet and get in a room and debate it out and keep the culture of the Fed of debate and disagreement, keep it alive without regard to political pressures. And I think that'll be the one imprint of what just happened earlier this week.
I don't know how you can necessarily take anyone's word for it. I mean, we've seen with Supreme Court nominees, are you going to do this? We try litmus tests about all kinds of different things, and they may convince us one way, and then critics say that they don't stick to what they said. Do you think Kevin Hassett could get in at this point, Rob? I
think I'll be careful about talking about individual. I think any of the candidates have the opportunity, but the onus is on each of them in different ways, just to show that there's going to be views from the White House and other officials, as there should be, and they will listen to those views. But when they get in the room, they're going to debate it out and go through the process, and the committee is going to make decisions without regard to political pressure or fear or political considerations. I think any of these candidates could do that job. The bar will be higher for them to demonstrate it, particularly in order to get confirmed.